Good morning, everyone, and welcome to the Morning Leap for Wednesday, September the 9th, 2015. My name is Doug McKay, and this is Quantum Leap Futures. If you're interested in finding out more about what we do in here, please send me an email at quantumleapfutures@gmail.com or give me a call, 647-545-8065. This is a subscription room. We've been around now, coming up on 7 years, and each morning we come together, we take a look at the structure of the market, the macro to the micro, then we drill down to our trade levels and our hypotheses for the day. If you want to watch previous episodes, please go to YouTube and do a search for Quantum Leap Futures, and please follow me on Twitter at Crazy2. And if you like what we do, please like and tell your friends. Before we get going, let's get the disclaimer done. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own due diligence and your own trade plan and your own risk metrics. Okay, so let's just start with, I want to bring this back to everybody's attention. This is the inverted head and shoulder pattern that I posted back on August 26th. We went up and hit that primary target at 76.75, then we kind of dropped back off, but the pattern itself never got violated. We never got back below that 1875.50. So it is still valid, and the primary target at 1998.25 is still very much intact, and we're now within range. So keep this in mind. The extended target is still showing up at 2033.25, but not likely to be hit today. I'm looking at a possibility of taking out this target today. There's a bunch of other stuff up there as well. But each morning I'd like to start with a basic chart and then work my way down. It's a basic candlestick chart with the two moving averages, a 9 EMA and a 20 SMA. I start on a monthly and I work my way down. All I'm trying to do is where are we within the different time frames in terms of trend. So I'm looking for slope and separation for the strength of the trend, and then whether or not the trend has been violated or challenged. And you can see that this monthly has rolled over. We've had our first close below the 9 and the 20 since all the way back here, back in September of 2011. We come back up a bit, and we're challenging the 20 SMA, but we have not crossed above it yet. So the trend has been invalidated or violated and challenged, and we don't know if it's going to pop up and continue, but we see some weakness coming in on the monthly. On the weekly, we've been talking about this FUBAR tech gap. Mr. Sneaky. FUBAR is a candle that has a huge spike in volume and a big selling wick or selling tail, and creates the tech gap. We've moved too far away from the 9 EMA. Then we get the indecision bar, the inside bar, which is the Mr. Sneaky, and this is a big reversal pattern and likely to come up and close the gap. The gap fill right now on the weekly is showing up somewhere in the 2014-2015 area, and we do have targets up there. We had the same pattern, but the trend, we have a trend starting on the weekly, and it does not get violated until we get back above the 20 SMA. So we do have a possible start of a downward trend. We could easily come and reject the 9 and continue the pattern down. Going down to the daily, you can see we had the same pattern on the daily. We had the FUBAR, tech gap, Mr. Sneaky, came up, closed the gap, tech gap, rejected the 9, and then it looked like we're going to get continuation down, but now we've come back up and we're now trading above the 9 and the 20, so the downward trend on the daily is being challenged. So we saw some weakness coming in on the larger time frames, and now we're seeing in the smaller time frames, they're starting to challenge the downward trend. Going into the intraday to see if there's any trends coming into the RTH session, you can see on the 4-hour, we've got this upward trend starting. We've got good slope, good separation, prices paralleling the 9 very nicely. Going down to the 1-hour, same thing. We've got good slope, good separation, and prices paralleling the 9. Came back down, had a little bit of a tech gap right here, came back, closed the tech gap, but so far we've bounced off of it. So the trend is up on the 1-hour. On the 30-minute, same thing, good slope, good separation, tech gap, closes the tech gap, challenges the 20, fails to break below the 20, pops back above the 9. Got a little bit of slope, a little bit of separation, so the trend is weakening, but it is still in force. And then going down to the 15-minute, sideways consolidation. We are above the 9 and the 20, so we could just pop up and continue this trend after consolidating higher in somewhat of a flag formation. Going into the 5-minute, same thing. We had this nice good trend going, created the tech gap, rolled over. It started a downward trend, but it was being challenged all the way down, and now we've challenged it again and we've popped up and currently trading about the 9 and the 20. So mixed in the shorter time frames, and weak on the longer time frames, but the intermediate time frames are showing that we have possible continuation up. So let's take a look at the structure of this market. Of course, this is the significant breakout candle that I continue to reference. The 50% retracement on this significant breakout candle is at the VPOC at 1995. We failed to get back up there. Of course, we've got that inverted head and shoulder target up at 98 1/4. And last night overnight, we were talking about this yesterday about continuation and going up into that next big target above, which was the 1978, and we went up and hit that overnight. We made a high of 92. Remember that on the weekly fractals, the high weekly fractal is at 1992.75. So that's something to keep an eye on, as well as a target. Right now, we're above value on the smaller 3-day micro composite where we tried to hold value. Remember, we talked about this just yesterday. We had a significant breakout candle. It was a gap and go candle. We came down. We hit that low at 31. They consolidated. We had a FUBAR Mr. Sneaky on the daily RTH session. Actually, we had a FUBAR Mr. Sneaky, Mr. Sneaky. We gapped up, tried to hold value higher, didn't quite get back to the 50% retracement of the significant candle, tried to hold value at 78, couldn't hold value, gapped back down, came back down into the 33 area, accepted value at 31.50, and then we tried to gap up, failed, couldn't get back to that 78, came back down, searching for buyers again, consolidated, and accepted value at 21. And then yesterday we had the gap up, and we got as high as 1968.75 and closed at high of 1968.75, and we closed at 1965.75. Now overnight they've taken us up yet again. We're going to get another huge gap. Right now, if we open up where we are right now at 1986.75, and our close was 1965.75, a half gap fill is 1976.25. Just writing that down myself. Remember gap rules, a gap of this size is rarely closed, so we have to watch for, initiative buyers stepping in. I would be looking very, very closely at this 1984.75, sorry, 1984.75, 1984.25 as a key area of trading. Above that, we stay in price discovery. I would look for a move up towards this 87 and 91. And that weekly fractal up at 92.75, and then possibility of now when I talk about the weekly fractal, just so to make this clear, the weekly fractal is on the 24-hour. This is a RTH chart, so you can see our range high is 91 here, but in the Globex, if I bring up the let me just bring that up so that you can see it. I bring up the weekly here. You can see that our high here is 92.75. So on this consolidation and reversal pattern, our weekly fractal is up here at 92.75. But in the RTH, our highs, or our weekly or daily fractal high, is up here at 91. So I'd be looking at, above 84.75, continuation up into 87.75, up into the 91, 92 area. 93 is the next big target, but the naked VPOC right here and the retrace to the 50% of the significant breakout candle is 95. A little bit of resistance at 97, but I tell you, if we come up here and we accept value around 95, I'd be looking at that 98.25 being taken out. Very, very strongly. We've got a lot up there. I'll show that when we get there. I don't see a lot of resistance at 2,000. Above 2,000, you want to look at a move to the 0250 and the 04.25, and then a little bit of resistance coming in at 08, but the big number above us is going to be up at 1150. Based on the 20-day ATR target, which is 47.59, off of the low overnight at 1964, we still have room to go and within the 20-day ATR target, and that 20-day ATR target, or average true range target, upside off of the bottom of overnight is at 2011.50. I've been saying that's the big next destination above 2000 is this 11.50. So we are within range of that today if we get into a trend. I don't think we're going to get there today. I think we're going to stall out, and we're going to chop around between 79 and 95. That's my main hypothesis as we try to hold the gap. Remember, half gap back is 76.75. I'm actually looking at this 77.75, but you could use 76.75. It is a CLVN as well, and I can mark that. I'll mark it on the other chart. Don't need to mark it on this chart. If we get back below the 76.75, then I'd be looking for a bigger move back into the 69.25. Whether we get all the way back into the 66.50 and take out the naked close at 65.75. It's possible. Our downside ATR target off of the high overnight at 92 is 1944.45. So that takes us, believe it or not, all the way down here and starts to fill in these gaps. So we do have the range to make the big moves today based on the average true range. We just have to play the levels as they come out. So let's go and take a look at the overnight. So of course our overnight is here at 92. Oops, wrong one. Overnight high is at 92. Our overnight low is all the way down at 1964. Our overnight VPOC is currently sitting at 85.25. This could change to, it's been shifting back and forth. It was at 86. It shifted down. Now it could shift back up, but we'll put it where it is right now. When I say it was 85.25. There is a big thin zipper line, okay, right here. Now you could use the VWAP and the value area low overnight, but I would take the more conservative, and I would look at this 81. If we get below this this 81, 80.75 area, then I'd be looking for a move down into that 76, 75 for the half gap. So I'm going to put a LVN at 80.75. And this will be a trade level, okay? Because below it, you've got a good strong target of that 78 area from the micro composite, the 3-day consolidation, where we tried to hold value. And then you've got the half gap target down at 76, 75, I'm sorry, 76 and a quarter. Okay, and don't really need this. I mean, it's pretty thin, so we'll take a look at the bigger picture below us. 92 we know about. So let's take this and move this out so we can see these levels clearly. All right, so right now we're going to open up with a huge gap. My first trade line is going to be just below the 85 at the 84.75, but I'm actually going to use 84 and a quarter. So we could come down and test the value or the most traded price overnight, come down, reject the 84.75, and then rotate back up into the target is going to be 87.75. We're trading it right now, but we have to have our targets. We're not going to stay at 87.75. Okay, and then we've got the naked close at 88.75 from the significant breakout candle, or is it, no, I'm sorry, it's from this day right here on the 28th. And likely to take that out. Of course, our overnight high is at 92, and above 92, there's really nothing up there. So, you know, if we hold this 84 and a quarter, this is a tough area to trade because you really don't have any edge here until you get down to 84 and a quarter. You know, a breakout to me would be above the 91. So I would take the 91 into the 92. There's really nothing else to guide you there. And then above 92, there's nothing. I mean, you've got a target at 93 and a quarter and 95 naked close and the significant halfback. The next resistant area doesn't come in until 97.50. Yeah, 97.50. So really, gang, you really don't want to be trying to fade this market right here until we get back below 84 and we see some weakness coming in. So it's going to be, you know, I hate to say it, it was tough trading yesterday, but it's going to be even tougher today because we're opening up in the middle of a, you know, a very blunt area with no real defined price, you know, acceptance or rejection. Now we have to go based on range highs and value areas and measured moves and naked closes and naked targets. So there's not a lot of edge. So be careful here. You know, pick your spots. Let them develop an area to trade from. In other words, wait for the RTH to set up some areas and some ranges like the IBs and the VWAPs and the VPOCs and the LVNs and take the shorter time frame. If you're going to do anything, go back and profile the breakout day. That would be the profile, and that's the 821 candle. That would be the profile day. I was already looking at it earlier. And that's the one I would use. The value area low on that is 820, 1981. Well, let's just take a quick look at it. Uh, 821. There we go. I'm sorry, the value area low on that one was 87. So we have that value already at 87 and a quarter. There's an LVN here at 81. We're using the 80.75, so that fits right there. The naked close on it has already been taken out. The range low is 68, but we'll have that on our chart. The range high is all the way up at 1850. The VWAP midpoint and VPOC is 95, so they're identified. LVN at 03 and 08. So there's not a lot of new information that we don't already have. The big thing from this is right here at the VPOC and midpoint and VWAP. All right, so let's continue on here. So above us, we've got the 91, target at 92, target at 93, 95, and then resistance at 95. We've got the head and shoulder, inverted head and shoulder target at 98 and a quarter. The 61.8% retracement is 99 and a quarter, and then not much resistance at 2000, but we'll put it as a trade level because I think if we break into 2000, you can get the 0250, 04 and a quarter. A little bit of resistance at 08, I believe, right? 08.75. And then the big target above is at the 1150. And the 1150 is also our ATR upside target. All right. So that defines the upward movement. Let's take a look at if we come down and we get below this 84 and a quarter. Below 84 and a quarter, the big target is going to be the, this is now next big target below. All right, and below 84, there's really nothing until that 81, but we're using the 80.75. I'm actually going to move it to 81 because we've got the LVN from that significant breakout candle. Excuse me. And there's not much below there to target too. I mean, you could target 82, I guess, but I think the 81 is more appropriate, and then a breakthrough bringing, you got 79 and a quarter, but I'm really using 78, 75. And then below that, there's a little bit of support you might find at 77, 75. And then below 77, 75, you've got the half gap fill. The range high from this day is 73.50. And then below 73.50, you're going to have the 69 and a quarter. And then inside of the prior day range, then we're talking some bigger moves, and the move down to take out the naked close at 65.75. But I would be looking to, and that's not the ATR target. I'd be looking for them to come down and take out the overnight low, especially if they leave this overnight high alone here at 92. If we get below 84 and they come down and take out the half gap and they don't hold at 73.50, I think you got a pretty good trade down into the overnight low at 64. And then inside of the range, I'd be looking for a test of the value area at 61. the key line in the sand does not change for me. It's still at 58. Below 58, I'm looking for a move back into the test of the VWAP in the midpoint. And continuation down, you got the close or the open at 51.50. I'd be targeting 52.25. Just in front of it. But really, we get back into value, I'd be looking for an 80% destination trade all the way down into the value area low here at 45. Remember, the downside ATR target is actually just below that at 44.50. Let me just take this off, because I think we get down here, we'll target that at 44.50. Okay, and in between you got the naked VPOC at 49, and really nothing else I can see that, 49.75 is a significant, but I'm not using it as a line in the sand today. Below 44, then I'm looking for a move down to the key line in the sand, which should give us lower price discovery back into all these targets below. You've got 37.25, the 34.50, 32, the naked VPOC at 31, 26.75, and then the big target down below is in this cluster area down here at the 21.22 area. So that's what I'm looking at. Again, my main hypothesis is really a rotational day with upside at 95 and downside at 76. That's basically what I'm looking at. I think we're going to chop around here. Above 84.25, you really want to be looking long. It's hard to short up here. So you have to wait until we break 84.25 and then get short into the 81 and back into that balance at 78, 75 and a test of the 77 and probably your half gap fill. That's what I'm looking at in the ES. Let's take a quick look at gold. Gold has broken back below, gotten out of below that range. It's trading right now below the CLVN at 1290.13 area. I'm looking for a bigger move down to the 1107, possibly 1101, and the big one, remember, is down here at 1091. If we can hold the 1213 area, look for a rotation up to 1650, possible 1840, but gold is looking weak right now. So I really think they're having trouble finding buyers with conviction. I think we're going to come down at least to the 1107 before we get a bounce in gold. Not going to be trading gold today unless a FUBAR Mr. Sneaky tech gap comes up on the 15-minute. All right, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.